Substantive procedure for evaluation of land and building. Uh, for Regarding the land and building revaluation, the substantive procedure that we have to do, that the auditor have to perform is, first we have to obtain a schedule of land and building revalued and cast it to confirm the accuracy and completeness of the evaluation adjustment. Okay, and calculate the depreciation charge for the year to ensure that depreciation has been provided on the correct valuation of the revalued assets. On the sample basis, agree the revalued amount to the amount returned in the evaluation report valued by the valuer. Agree that revalued amount are adjusted in the non-current asset register. Recalculate the total revaluation adjustment and agree to the revaluation surplus. Review the adequacy of disclosure in respect to the revaluation of land and building and ensure it is in accordance with IAS 16 property, plant and equipment. Okay. Substantive procedure for valuation of work in progress. Regarding land and buildings, always IAS 16 will not cover, because land, property, plant and equipment will not cover land, but whereas for building, it will cover. Regarding depreciation, for building there will be depreciation. If the land is owned by the company, then there will be no depreciation for the land. So we have to keep that in mind, that when there is any depreciation to be recalculated, only the depreciation, it is telling about only the buildings, not for the land. As well as if it has been revalued, then we have to check on what basis it has been revalued. Like we get valuation report and sample on note number 3, there has been said that we need a valuation report with a qualified valuer, and we need to check on what basis and what basis that the land has been revalued, and supporting documentation for them as well. Then only we can agree on the revalued amount. And then substantive procedure for valuation of work in progress. Discuss with management how percentage of completion is determined and assess its reasonableness. WIP. For example of WIP, agree that the percentage of completion determined is in accordance with the company's policies communicated prior to the count. Review the difference between standard cost and actual cost and discuss with the management how it is dealt with. They obtain a breakdown of standard cost and agree to the supporting documentation like payroll costs to confirm its reasonableness. Okay. Obtain a list of total WIP, cast it and agree to trial balance and financial statements. For example of WIP, recalculate the value to ensure correctness of inventory valuation. Substantive procedure for year-end accrual for employment tax payable. Number 1, compare the accrual for income tax payable to the prior year. Investigate any significant difference. If there is any significant difference, there will be a reason why. Is there any changes in number of employees so that the employment tax payable have been changed, or like that, or the salary expense have been increased? Such kind of the reason for those differences should be reasonable. Then only auditor can accept. Okay, and recalculate the accrual for the sample of employees to confirm the accuracy, and then agree the subsequent payment to the post year end cash book and bank statement to confirm the completeness. Agree the year end employment tax payable accruals to the payroll record to confirm accuracy. Whether the year-end tax payable employment tax payable is matching with the payroll tax accrual calculated as per payroll record, that also we have to match. Okay, If it is not matched, then we have to investigate why it is not matching. Okay. And fifth number, review any correspondence with tax authorities to assess whether there are any additional outstanding payments due. If there is any additional outstanding payment due, then whether it is, we have to confirm that whether it is included in the year-end accrual or not. Okay, so sixth number, review and disclosure made of employment tax accrual and assess whether these are in compliance with accounting standard and legislation. Okay, and another thing also, we have to check whether they are paying on time or not. Okay, if they are not paying on time, there will be some fine and penalties that the entity would be liable to pay. That also we need to check as per the regulatory, uh, as per the law of the respective country. Okay. Substantive procedure for valuation of inventory. Obtain breakdown of WIP and agree a sample of WIP, work in progress, and agree a sample of WIP assessed during the inventory count to the WIP schedule, agreeing the percentage completion to that recorded to the as well as on inventory, accounting standard IAS 2 is applicable. So we have to check whether it is as per IAS 2 or not. While auditing, we have to check whether it is as per IAS 2 or every country have its one accounting standard, or it follows some accounting standard, or as per that accounting standard it is matching or not. We have to check that. Okay, select a sample of item included in number 2. Select a sample of item included in WIP at the year end, and ascertain the final unit cost price by verifying cost to be incurred to completion to relevant supporting documentation. Compare to the unit sales price, including it in sales invoice post year end to assess NRV. So, for a sample of item included in WIP, like as per IAS 2, how do we value WIP is first we get the sales price minus cost of completion, and then minus the cost to be incurred to complete, and minus cost to sales, and the resulting value will come as the value of the WIP or the NRV of the WIP. Same in the note number 2, I have to select a sample of item included in the WIP at the year end, and we have to check what is the final unit cost price to be incurred, and by verifying cost to be incurred to completion to the relevant supporting documentation, and compared to the unit, we have to it have to be compared to the unit sales price included in the sales invoice post year end to assess the NRV, net realizable value. So in a note, in third number, for a sample of inventory items, finished goods and WIP, obtain a relevant cost sheet. Agree raw material cost to resend purchase invoices, labor cost to time sheets or payroll records, and confirm overhead allocated are of production related nature. Okay, we have to check the cost sheets of the finished goods and WIP as well, whether the relevant costs are included or not. Like the admin related overhead should not be included in the inventory cost. Only production related overhead only, and only the inventory that are directly attributable to them are included in the inventory valuation, whether it is WIP or finished goods. Review aged inventory reports and identify any slow moving goods. Discuss with management why these items have not been returned down or if an allowance is required. Okay, discuss the basis of WIP valuation with management. Basis of WIP valuation with management and assess its reasonableness. Examine post year end credit note to determine whether there have been returns which could signify that or write down is required. Examine post-period credit note to determine whether there have been returns, which could signify that a write-down is required. Substantive procedure for research and development expenditure. Obtain and cast a schedule of intangible assets and agree the closing balance to the general ledger, trial balance, and draft financial statement. Okay, always on any kind of expenditures or assets, first we have to obtain a schedule or obtain a list of those assets or expenses, and then we have to compare it with the whether it is matching with general ledger, trial balance, or draft financial statement. Then we proceed to another step, like in step number 2, for it's not a step, it's for a note number 2, for those expenses expensed as research, agree the cost incurred to invoices and supporting documentations and to inclusion in profit or loss. Okay. For those capitalized as development, agree cost incurred to invoices, agree compliance with the criteria and IS 38 for capitalization, and verify technical feasibility by discussion with development manager or by reviewing feasibility report. Okay, so we have to if any expenditure is capitalized, if any research and development expenditures are capitalized as development, then we have to agree the cost with invoices, and there are 5 criteria that have to be met for capitalization as per IS 38. So we have to verify all those 5 criteria whether it is fulfilled or not. Like first one, like whether there is any technical feasibility, whether it is technically feasible to completion or of for use or sale of that asset, intangible asset, and whether the company have intention and ability to complete, use, or sell the assets. That also we have to check. And then future economic benefit, it all is these all criteria are mentioned in IS 38 that the auditor will have to check. So whether from that expenditure, capitalization expenditure, whether future economic benefit is uh, future economic benefit is probable or not, that also auditor have to check. And in order to complete the development, whether availability of resources or not, or whether there is any availability of resources or not, and development expenditure, whether the development expenditure can be measured reliably or not. When the auditor have to check all those five criteria are matched or not, then only have to agree upon those capitalization. And review market research report to confirm that company has ability to sell the product once complete and probable future economic benefits will arise. Okay. Recalculate the amortization charge for a sample of intangible asset which have commenced production and confirm that it is in line with the amortization policy of the company, and that amortization only commenced from the point of production. For the new project, discuss with management the detail of each project along with the stage of development and whether it has been capitalized or expensed. Okay, and review the disclosure for intangible asset in the draft financial statement to verify that they are in accordance with IS 38 intangible assets. Okay. Substantive procedure for year-end sales tax liability. Compare the year-end sales tax liability to the prior year balance and budget and investigate any significant differences. Review and disclosure made of sales tax liability to ensure so number 1, we have to compare the year-end sales tax liability to the prior year balance or budget and investigate any significant differences. Review any disclosure made of sales tax liability to ensure that it is shown as current liability and assess whether disclosures are in compliance with accounting standard and legislations. Agree the subsequent payment to the post-year end cash book and bank statement to confirm completeness that it has been in line with the terms of tax authority. So, why? Because if the tax is paid after the year end, that it proves that it exists. So it confirms the completeness. Number 4, review any current and post-year in correspondence with the tax authority to assess whether there are any additional outstanding payment due. If so, confirm they are included in the year-end liability. So, why we have to do this is because to detect unpaid amount, disputes, and penalties amount. So, agree the year-end tax sales liability. Sales tax liability in trial balance to the tax return reconciliation submitted to the tax authority and cast the return reconciliation. It ensures that financial statement is equals to the tax filing. It prevents mismatch and manipulation. So recalculating the amount payable to the tax authority as being sales tax charged less sales tax incurred. So it confirms the accuracy. Substantive procedure for valuation of trade receivables. Like we can say that receivables are the promises and not all the promises are kept. So first, now obtain a breakdown of the opening allowances and consider if the receivable provided for in prior year have been recovered to assess the reasonableness of the prior level allowances. So it detects the disputes, and dispute mean whether if it has not been paid, then we can think of providing it for allowances. Second, review the aged trade receivable ledger to identify any slow moving or old receivable balances and discuss the status of this balance with credit controller to assess whether they are likely to be received. Because old balance is risky and it might need allowances. Review whether there are any after date cash receipts for slow moving or old receivable balances. Okay, and then review customer correspondence with the significant customers and authors to identify any balances which are in disputes or unlikely to be paid. Review board minutes to identify whether there are any significant concerns in relation to payment by customers. Calculate the potential level of trade receivables which are not recoverable and assess whether this is material or not. And discuss with management.